Hello traders, it is Wednesday, May 8th, and that means it's time for me to record my weekly video. For those of you who might be watching the video on YouTube, I release this video a week after the fact. If you like it, please click the thumbs up. Also subscribe to my YouTube channel. The way that I start each of the presentations is to review the prior week's picks. That way you'll be able to go through and see how we performed. So let's go back and take a look at the market first of all. And I'm going to overlay some of the features in Option Stalker. Everything I'm going to show you tonight is included in the Option Stalker platform. It includes real-time data, so you don't need a separate brokerage account. You don't need to pay for data feeds separately. This is the SPY, the S&P 500. It's a daily chart, and you can see since my last video, we've been down. Right now we have some concerns over the China trade negotiations, and there's a little bit of a lover's quarrel going on. China tried to renege on some of the commitments that it had made earlier, and Trump came back with tariffs that are going to be imposed on China Thursday night, midnight. So that means tomorrow night at midnight, China could have new tariffs imposed. Now, these tariffs didn't come out of left field. This is something that's been talked about before. They needed to get the deal signed by Friday in order to avoid this, but the negotiations are dragging on. This is a binary event. We do not know how it's going to turn out. What I did was on the S&P 500, I put an alert line right here at what I believe to be major support, major horizontal support. This was the breakout. That is now support. And you can see how we almost tested that level yesterday. Let's add some major moving averages. Toggle on, toggle off, very easy. You can see this 50-day moving average coincides with this horizontal support level, and it's right at 285. So everything that I tell you tonight is going to be contingent on the SPY above 285 for the bullish picks or below 285 for the bearish picks. Market first, market first, market first. Everything starts with the market. Never lose sight of that. Doesn't matter how good the stock is that you've picked. If the market's tanking, there's a 75% chance it's going to go down. So let's take a look at how last week's picks fared. And I did have a bearish pick in there. My goal tonight is going to be to find one bullish pick and one bearish pick. And then we'll watch to see how this event plays out. Now, I do need to talk a little bit about the China trade deal because that's what's driving the market. All eyes are fixated on every word that comes out of Washington, D.C. or Beijing. And there's not going to be a lot of news out Friday because the first meeting is going to take place Friday. So by the time they conclude the meeting, the market will be closed. Chances are we won't know until over the weekend what's happening. Now there is a chance that Thursday night, let's say that for the couple of hours that they meet, that everything seems to be going well, everybody calms down, there's a chance that the new tariffs that were supposed to go into effect Friday might be postponed. If that happens, the market will rejoice and it will rally on the notion that a deal is close and a deal is going to get signed. If the tariffs go into effect Friday, it probably means that the negotiations are going to drag on through the summer. And that would not necessarily be horrible for the market, but it's not going to be good for the market either. I don't see the market falling apart unless over the weekend you start getting a lot of mudslinging from both sides about the negotiations. That would be a major step backwards, and then yes, next week I certainly could see the market pulling back. If we trade below this 285 level on the S&P 500, there's a very good chance that we will test the 200-day moving average, which is right around the, let's call it 277 level. There's also a slight chance that we could go all the way down to the 100-day moving average, which is 274. So right in this area here, we should be able to find support if things really fall apart with trade negotiations. Now on the upside, if everything plays out well, and let's say best case scenario, let's say that the tariffs Friday are postponed. Well, the market is going to rally. It could even take out the high. Let's call it 295. So we've got a good maybe 70 or 80 points of upside in the S&P, but we have more downside risk. And the reason for that is that much of this rally has been predicated on a China-US trade deal. So this is very, very important. We'll see how everything plays out. That's why I want to have a nice bullish pick and I want to have a nice bearish pick. BABA was a earnings play, and we sold a put credit spread below this 50-day moving average, and that moving average was breached yesterday, so you had to buy your put spread back. You had a few days of time decay, but this was a loser. There's no question. You had to reel it in, move on. It happens. We got hit with a nasty market move, but you can see this was Wednesday's video was recorded here. Thursday, it had a really nice day, and it looked like we were going to be in great shape. I loved this breakout right here, and boom, ran higher. But yes, it has since pulled back. If you're in a trade and you see a big gap down like that after making a new high, you should be exiting once that breakout has failed. So that's just a little technical advice. Whenever we buy these breakouts, we want them to hold. That's why we're in the trade, and that's our stop out point if it falls back below that breakout. Let me reemphasize that. If we're buying breakouts, we're expecting this support level to hold. When it fails on the backside, we need to get out because it could really fall hard. We don't know how far it's going to go. Our assumption is that it's broken out, it's taken out those sellers, and boom, 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 it should march higher. So again, if we're buying breakouts, this is where our stop is. It retreats below that point, we stop out of the trade. But we had sold a put spread out of the money, and this was with the intention of holding till just before earnings, but we had to stop out if that 50-day MA was broken, and it was broken. So definitely a loser. Disney was one that we looked at for a short. You can see it really hasn't done a whole lot of anything. It announced earnings today after the close, which incidentally were well received. Good number. Stock is up a little bit after the number. So this wasn't really a winner or a loser. Fox A, this is where we did the webinar or the video, I believe, in here. And this is what the stock did the next morning. So hopefully you're watching the stock from the open and it sold off hard. Losing pick, but hopefully you're paying attention to the heavy selling that Thursday morning and you never took the trade. You had a little up trend line here that was broken, and now we have some support on the stock. J&J, all things considered, has held in quite well. I'm going to zoom out. We'll take a look at the longer term chart, and you can see it's still got plenty of upside. Really nice trend here above all the major moving averages, and I'm going to add one of our indicators, 10SI, that helps us gauge strength relative to the market. When it's above 0, that means it's strong relative to the market. So this is where the video was recorded last week. We had this nice little breakout here. Yes, on a bloodbath day like yesterday with the S&P 500 down 70 points. Yes, there's your breakout. Should take a small loss on this. But you can see the stock is holding up really, really well. Still maintaining that breakout pretty well. It's above the major moving averages. I still like J&J. Merck holding that 100-day moving average even yesterday. And you can see this is where the video was recorded last week, barely down. So it had a nice initial move Thursday and Friday, and then this week it's been a little bit soft with the overall market. But again, all things considered, see the relative strength here, not too bad. And that's really the point of everything that we do. I use relative strength as one of my primary indicators. This is our edge. You can see that when the market tanked, these stocks held up well. And they gave us time to evaluate the overall market conditions and to exit the trades without taking a beating. Now, there are a lot of stocks out there that really got hit hard yesterday and today. But these stocks really held their own quite well. So, BABA, earnings put spread, looking for the stock to move higher into earnings. Didn't work out for us. Had to stop that trade out. Disney was flat. That would have been a short that we would have taken. Fox was a loser, but there was a chance to get out. Actually, there was the likelihood that you didn't get in the trade when you turned on your screen Thursday morning and the stock was falling apart. J&J and Merck both held in very, very nice. So this is a losing week. This is the first one I've had since I started recording these about 6 weeks ago. We were long, so market pulled back. That's to be expected, but nothing dramatic here. No major damage. So tonight what I'd like to do is I want to go in and I want to take a look at the custom search, and I'm only going to use one search. It's going to be a very basic search. I'm going to go into option liquidity. I'm going to look for very, very liquid options. I'm also going to look for post earnings plays. So earnings date previous is what I want to mark. And I'm going to go back. Let's go back to April 22nd and give ourselves some time. And let's go to, I don't necessarily need to see anything that's just posted Monday or Tuesday, so let's go to Friday. So this gives us about a 2-week window that we're searching. And you can see we've got a lot of stocks that came up in this search. Now I can further qualify this by marking off other criteria, but I'd rather just click through these candidates. I'll put the list up after I'm done, and I'm going to move it to a different screen so that I can just start clicking through. I'm going to be looking for bullish or bearish candidates, and I'll do a little bit of technical analysis while I highlight these stocks. This stock is in a compression. It really has done nothing since the earnings announcement. By the way, earnings are designated B means before the open, A means after the close. Apple, nice reaction, but it's been pulling back. This is one of those stocks. You can see it's pulled back over $10 in the last couple of weeks. I don't see anything there that tells me this is one that we want to pick. AMD, nice slide. You can see this downward sloping channel. You can also see how it's broken this uptrend line right here. You can see it's right above the 50-day moving average. Here's what I don't like. Choppy. Back and forth, makes big random type moves. This would be more of a short for me because it's starting to gradually pull back. APC is a takeover candidate. I don't see anything here. Caterpillar. You can see the relative weakness here. You can see how it just broke through the 100-day moving average. And you can also see how it's breaking this trend line right here. I might as well draw it in for you, make it a little bit easier to see. We'll connect these lows right here. So we've broken the 50-day, the 200-day, uptrend line, and the 100-day. relative weakness. This is a decent short. Stock is a bit choppy for my preference, but it's not a bad short. So we're going to put that on the list. You can see up and down and up and down. So that is one thing I don't like about Caterpillar. Nothing there. Compressing, nothing there. This could be interesting if it can get through this low right here, because you can see it's pulling back, but the stock doesn't move very much. That's CVX, Chevron. This is a nice little decline here. You can see it's breaking through the 20-day moving average. It's already below the 200-day moving average. Excuse me, that's a 50-day moving average. Still got the 100-day. That's a weak chart though. There you've got a lower high, double top. But we're going to keep looking. I like this. This is good. This is Ford. Cheap stock, $10 stock. Look at how it's been able to tread water even though the market's been down. There's the S&P 500. You can see it's down. Stock is up. Great relative strength. Above all the major moving averages. Earnings announcement. Big breakout. So we'd like to buy this stock at about $10.20. We don't care if it comes back and tests this little trend line here. In fact, we'll use that to gauge kind of where we think the stock might pull back and where we'd like to buy it. So yeah, I would buy a pullback in this. You could also approach it with an alert right at the high. If it starts breaking out through this resistance, we want to own it. I'm going to zoom out, take a longer term look. I'll take the SPY off. That'll make the chart a little bit easier to read. And you can see the stock still has some upside here. Plenty of upside. Can get all the way up to $12. There's one shoulder, there's the head, there's another shoulder. So we're also getting a bit of a head and shoulders breakout on this gap right here. This is all good stuff. I like Ford. I would definitely consider buying Ford. And I'm not a huge fan of the stock either. I mean, I don't trade auto stocks very often. They tend not to move very much. Here we've got the big gap up in Facebook, and we're starting to pull back, and we've got this little channel forming here. So the way that we would buy this stock is we would draw a line across the tops, like so. And our buy would be right above that line. That would be a bull flag formation. So when it comes back up, we want to buy it. I'm going to go back to Ford, and we can use the same principle there, except you got to go horizontal because there's not much movement. It's really compressing sideways. FCX. Down below the 100-day moving average. Nice steady selling. Tends to be a bit choppy. I'm going to see if we can find a better short than that. That stock is choppy. This has a nice downward trend to it, but it's a $5 stock. I could have filtered that out as well. GE has been hanging tough. Big gap on the earnings. Been able to hold the gap. Still sitting above that 200-day moving average. So in this instance, you could also do the same as you could draw a nice little line down here so that if the stock gets above that line, but you can also just figure out where that stock would need to be above a little downward sloping trend line. And it would be somewhere, let's call it above this 1035 level, which putting it above this red bar makes sense also because this stock opened here and there were sellers and they pounded the stock down. So if the stock can get above this point, perhaps those sellers are exhausted and it has a chance to run. So there is some method behind that madness. MGM, Halliburton. That's a weak chart through horizontal support there. Got another horizontal support level it needs to get through here. That's not a bad short. I would prefer to short something that's trading a little bit higher that has more downside to it. HLF, this is nasty. You've got the earnings announcement after the close, gaps down, and now it's continuing to sell off, breaking horizontal support and in a general downtrend. So that's a pretty weak chart. Zoom out. You can see it is approaching some pretty major horizontal support, 52-week lows. We're going to avoid that one. Intel. That's not a good sign for Intel. Look at this channel. There's the high, there's the low. Today it breaks through the bottom end of that channel. It's also breaking below the 200-day moving average. So Intel looks pretty weak right here. May not be a bad short. I'll just make that note. All of these stocks have very liquid options. Here's another super nice one. JCI, Johnson Controls. They are in the automotive industry as well. Big gap up, holding its own. Place that alert right there. If it breaks out through 39.60, that's a stock I think you can own. We'll zoom out, take a look at a longer term picture of it. Yeah, if it gets through this level, it's going to also make a 52-week high. Certainly looks good to me. That goes on the list. Coca-Cola, don't see anything there. Gap up on earnings. You've got your downward sloping trend line. If you wanted to buy and get in on this longer term uptrend here, that's what you would do, is you would place a trend line like this. And if the stock breaks above it, that's where you want to buy, on the notion that it's going to continue higher and get back on this longer term uptrend. I like it. Horizontal breakout after earnings, goes up, holds its own. Yeah, I like this stock. I think this is a good buy. Insurance companies in general posted a very good quarter. MGM, after the earnings announcement, the stock has been falling. It's below the major moving averages. Bounced pretty well today. And it's got this horizontal support level right here. If it can break below that, it would be a decent short. 3M, boy, really, really tough. But coming up on horizontal support right here. So I wouldn't want to short this stock right here. But that is a nasty, nasty fall. And you can see the reason we're going through this particular search is that earnings announcements are an event. And then there is a discovery phase, price discovery phase. Everyone's trying to reevaluate the company, decide what the proper price is. That means we have an opportunity. Here you can see a nice downward sloping trend line. And this is Philip Morris, and support right on that 100-day moving average. But it's choppy. Down, up, down, up. So we're going to take a pass on that. MRO. Microsoft. Microsoft earnings gap, and it's been pulling back slightly with the market, but it looks like it's starting to find its sea legs here. Microsoft is a stock I would consider buying also, but I'd need to see it back above that breakout. Let's call it the 126 level. If it can get back above 126, I think it's a good buy. Again, everything that we do is based upon the market reaction to the news out of the China-US trade negotiations. So if we're long, we want the market to rally from this point, and the SPY closed at 288, let's call it today. So we want the market higher than 288. We want that news to be positive. And if it is, these stocks will perform well. Procter & Gamble, a little bit of a dip after earnings. You can see how it rebounded. It's edging its way closer to the all-time high. Nice, strong uptrend. This is a nice looking stock. Good relative strength. We'll be done here pretty soon. Qualcomm recently had big news. They have a licensing agreement with Apple that should be very, very good for them. Monster gap higher. I can't own it in good conscience here until I see it pull back, find support, and then have really good relative strength. And you can see here how it's losing its relative strength. So not that interested. RIG, pretty choppy, doesn't move much. It's been in a trading range for 3 months, so we don't want to deal with that. Starbucks, really big, strong uptrend, tight compression here. If we can get through that high, yes, I like it. Look at how strong this stock is. It's a defensive play, meaning that in times of market weakness, money is going to flow into these defensive plays because everybody's still going to need their cup of cappuccino in the morning. Snap. Series of lower highs here. Breaching that 50-day moving average. Horizontal support here. We had a nice little gap higher right in here. We don't want to see this support level fail, and we really don't want to see this support level fail. I'm going to put this up for my own sake. These are two major support levels that need to hold. If the stock takes these out, it's going to come and test this major moving average at 880. So keep an eye on this one. That could be a good little short. SQ. Look at this gradual movement lower. There's earnings after the close. Stock gaps down. You can see that the stock had one big candle here where it opened on the low and closed on the high, but it's been able to stay below that 100-day moving average. This may not be a bad short. I'm going to mark that one down on the list. I'm going to get one long and one short. AT&T, little choppy, not a big mover. Teva, down on support. TWLO. Twitter trying, this was a nice gap for the stock. You can see it's been able to hold most of those gains. It's been holding its relative strength pretty well until the last few days. That kind of hurt it. But it is a tech stock, so it's going to pull back. I think on Twitter, and I'm going to zoom out very quickly just to get our bearings, there's a high right there. You can see how it's filling this gap in right here, so it's got room to run. I would say, for those of you who like Twitter, that 37.49 level right in here, that's a support level you want to see it hold. If not, it could come back and fill in to right here, which is around the 36.50 level. This is Visa. Really strong uptrend. Small little pullback here. So this is the formation that I had mentioned to you. It's it's a bear flag formation. So rally up, pull back, draw your trend line. Oh, gaps up through that. Nice. Makes another run. Has another little pullback like this. Gaps up through it. another run. That's the way that a lot of stocks consolidate. So you had this really nice rally. Now you've got this little downtrend. You're looking for this downtrend to be resolved and the stock will move higher. V is pretty nice, but I think we've got some other better candidates already. Verizon, WDC, X, Xilinx. Big sell-off after earnings, holding its own. It's weak relative to the market, but you can see how it bounced off of this 100-day moving average, and it didn't quite get down to that 100-day moving average this week. And this was the big bloodbath yesterday. It's a doji, meaning there's a trading range. This stock is holding very, very well. For those of you who like selling out of the money put credit spreads, I think this is an excellent candidate. Right at that 114 strike price, sell your premium below 114 after the China news is known. Would be a real mistake Thursday morning to come in and say, hey, Pete told me I should sell this bullish put spread right below 114 and use that as my stop. And then you find out over the weekend that tariffs are in place and China is mudslinging all over the place, and now the trade talks have broken down and the S&P futures are down 70 points overnight. That would not be a good scenario. You must wait for this news to play out. So I think I've beat that drum enough tonight. Take a look at two more stocks here, and one of them is ExxonMobil. Really hugging that 100-day moving average. It's finding support there. Otherwise, the chart's fairly ugly. Zynga. This is nice. It's a $5, $6 stock. If I were trading stock, I'd say, yeah, this is a good candidate. Nice uptrend. You can see the channel. Breakout after earnings. Stock runs higher. Not pulling back with the market. Good relative strength. If you like buying stock, I think Zynga is a good pick. So I'm going to put Zynga down as one of the longs, just because you should be able to trade some stock from time to time. It's only a $6 stock. It's like owning an option that never expires. So let me go in, and I'm going to create a new list. And we're going to label this May 8th. And then I'm going to start adding some stocks to it. And you know what? I'm gonna scrap this for a second. I gotta really zero in on the stock that I want to have for the long. So I've written down the stocks I like. I like Ford. This is nice. I like JCI. That also looks good. And I like Met. And on the short side, I thought CAT sets up pretty well. The nice thing about CAT, and I could do this with some other China stocks as well, Baidu, Baba. Well, Alibaba is going to be announcing earnings soon, so I wouldn't use that one per se. But if the U.S.-China trade talks break down, guess which stocks are going to go down? The Chinese stocks are going to get hit pretty hard. So let me just flip through a few. I'm not using a search for these. I know what some of the popular names are. JD, Baidu, C-Trip. Okay, we're going to stick with Caterpillar, because if the trade talks break down, Caterpillar does do business in China, and it will hit the heavy equipment manufacturers. So we'll use that for a short, and I think Intel sets up pretty well too, but it's sold off hard. I think the other one's going to be SQ. SQ has just been in a very long-term drift lower. You can see the channel right here. It has not been able to get back above this 100-day moving average. It's got this gap right here. Did not respond to earnings very well. Relative weakness. So I think I'm ready to create our list. And then I'll give you instructions for each one of these. Zynga. I'm going to put Ford. Put JCI. And I'm going to put Met all on the list. And Caterpillar will be a short. And SQ. I'm going to save and close. And then we're going to have specific instructions for each. So first and foremost, if the news is negative and the market is selling off, we are going to short Caterpillar, and we're going to use the 100-day moving average as our stop. SQ, we're going to use the 100-day moving average as our stop, and we will short the stock. So if the news is negative, I'm expecting this low to be taken out very, very easily. With Ford, pretty easy. The news comes out, it's bullish. We want it to get through this resistance level. It breaks out, we're long. JCI, same deal. Right there. Met, same deal. Zynga, same deal. Right there. So, those are your marching orders for Caterpillar and SQ. If the news is negative, you can short those stocks right away when the market opens up, and they should have a nice, easy path lower. They are weak relative to the market. They are in downtrends. They are below the major moving averages, so the table is set for these stocks to go down if the market's going down. As far as the longs, Ford, JCI, MET, ZNGA, all of them have been really weathering this market decline very, very well. They gapped higher after earnings. They want to run. And they all have really good relative strength. So what we want to do is we want them to prove that they can move higher if the market is rallying. And these stocks should really get a big jolt if the trade negotiations are back on track. So those are our picks for the week. I kept it very, very simple. I just went in and I want to take a look because we're right on the heels of earnings releases in the last 2 weeks. There were many of them, and there's so many great stocks that don't react to the number right away. They take a day or two or maybe even a week to show their hands. And then once we go back and take a look at them, this is a gold mine. You're going to find some great, great stocks in here. You just need to click through them. If I weren't doing a play-by-play on each one of these, I probably could have gotten through the list in about 10 minutes. And all I did was I selected earnings date previous, put in the last 2 weeks, and went with very, very liquid options. And you could even mark stock strong relative to the market for your bullish picks, stock weak relative to the market. You could have marked off heavy volume. I didn't want to do that. I wanted to look at each one of the picks individually this week, and I think we've got a really nice list to work from. So Thursday morning, do nothing. We are not taking any action Thursday morning. Friday, we would only take action if there's some trade negotiation news known to us. If the tariffs have been postponed, then we would buy on the long side. If the tariffs are in place and the market sells off and there's all sorts of negative banter, okay, fine. Then we can take our short positions. I would prefer to wait the weekend to see how everything plays out for that really big news and then actually take action Monday morning. So we're at a little bit of a critical juncture. There's a binary event coming up. It is going to be a market driving event. So use caution this week. Those are your stocks. You have your game plan. Thank you. I look forward to seeing you next week.